global interest rates rising, inflation broadly coming under control in India, but of course there are serious global headwinds from overseas. In fact, at last year also, the finance minister made a point saying that she cannot guarantee what will happen if external influences come and spoil the party. So how do you look at these developments over the last few months?
Thank you, Thank you, Saurav. I think the last year has been a learning curve, again, for all of us. That the government, the leaders in the government, central banks, and people like us, maybe observers and maybe bankers. But let me put that into perspective. You touched upon inflation, and then I need to touch upon interest rates, and I need to touch upon I would say economic theory, and then put this into perspective. Conventional wisdom was that if you had inflation, which was beyond what you adjusted interest rates. But the whole of last year, the West did not do that. You had inflation in double digits, and you had interest rates nominal, just 2-3% at some countries. Some countries not even that. So basically, this whole concept of interest rate and inflation, I think, is under now, probably will go under re-examination. And in that context, what we did, I think, was perfect. That is that I think the central bank and the government resisted the temptation to hike interest rates, kept them at an even keel, addressed what could be challenges to inflation, and thereby contained inflation, and I think helped everyone, the lay consumer, in terms of not necessarily getting something at inflated prices, and keeping interest rates low. Because interest rates low in India in the past meant that you had the corporate world benefiting. But now equally, or a slightly higher proportion, the lay public benefits. Because if you look at in the system, borrowing from banks, I think consumer credit is keeping pace with the corporate lending and outgrowing it. So if you keep interest rates high, that sector is going to hurt. That will again hurt consumption. I think we're getting all these equations right. So globally, there were headwinds, but they have been, we can talk the whole 30 minutes in that. They have been contained in a particular way. I think in India, I think we did the right things by looking at interest rates, liquidity, keeping everything, and I think we cleaned up what we had to do. Further, going to the next phase, as it were, I strongly believe that we have 25 years as our horizon. A very simple reason, which has been paraphrased as Amrit Kal. My reasoning is that there's so much to be done that gives you a runway which is very long, and that runway will take you to 25 years of growth at near double digits. So that's what I hope we will be able to pace ourselves through a long period of very significant growth between 8 and 10%. Should get us to where we want to be.
But there are immediate headwinds, Mr. Kamath. Already growth has been, forecast. Even RBI and the, global financial institutions have sort of forecast, lower growth, particularly in FY24, and so what is your sense of the immediate headwinds? And I'll come to specific areas in a little.
The immediate headwinds, as I see, are still, the major headwind would still be the uncertainty in the political context across Europe. Other than that, I don't see any headwinds really. So if you then look at everything else that is happening in, whether it's in mainland Europe or further west, flows from in that uncertainty in fuel prices, impact on inflation, and the cycle that is coming around that. I would believe that once that political situation gets resolved, the war, things will come down to normal.